Good afternoon, everybody. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Friday, everybody. We are back at it again with some market news, market insights, and just some overall in-depth discussion. Guys, I have been thinking all week about, for some reason, news article titles and just the absolute audacity of people to speak with certainty for just the exact opposite to actually happen. And I'm thinking in particular about these people that go on CNBC and they talk about companies and how they'll mention their PE ratio, their earnings per share, the institutional ownership, the PEG ratio, all these things individually, and then they'll make an overarching assumption of the company. And I can't stand that. I really can't stand that. And mainly because none of it actually means anything. None of it's true. And we always talk about Palantir because that, to me, is one of the best examples. But you could say it about anything. Amazon or NVIDIA, Microsoft, all these companies. Guys, Palantir is 20 years old. NVIDIA is 25 years old, 30 years old. I think they're in the late 90s. Amazon, late 90s. Microsoft, 90s. These companies took decades to get to where they're at. And there's been negative news articles the entire way. Nobody really knows what's going on. Okay, and we're gonna talk about just valuation metrics and how when you see these news titles and they throw out these fundamental or technical analysis terms and it sounds great or it sounds terrible and it affects you emotionally, and then people make emotional decisions on their money. And I think about that all the time because they're almost always wrong. Almost all the time they are wrong. And it bothers me. It bothers me intensely. So we're gonna talk about that today. We're gonna talk about short interest, and short interest is essentially just the amount of shares outstanding that people have purchased, not purchased, but that they're of the available shares they're betting against the company, right? So you guys have maybe heard of short float or selling short or shorting the stock. This is essentially a percentage number of the shares available to buy that are being shorted. And it's a great metric for when you hear people talking with certainty about something. I always ask, well, are you shorting it? Are you betting against it? 99% of the time, I had one person who was very, very good at their job. They run a fund. It's a real estate fund, so it doesn't necessarily make sense in the Palantir world or the stocks that we like, but they did. They were like, yeah, we do have short interest. And they showed it to me. He had put contracts on the company that we were talking about. So one time out of maybe 100 that I've actually had the opportunity to just ask people, hey, are you shorting it? Are you betting against it? Is your money where your mouth is? Because it's very easy to look at Palantir's PE ratio and say, I'd never invest in that at all. But if you would have done that, okay, if you would have said that for the last 2-3 years or even 20 years, you would have never gotten the game, right? It's like picking a kid. You're the captain and you're picking a kid during recess for kickball. That's what this is like when you're evaluating stocks. Okay, oftentimes, we'll use basketball because basketball is our thing here at 15 minutes. So it's like you're the captain and you're picking kids to be on your basketball team. Okay, you want the tall kid, the fast kid, the strong kid. A lot of that, unless you already know them intimately, that's just optics. It's what it looks like. But sometimes, actually a lot of the times, the best player isn't the one that looks like the best player, right? If you know anything about basketball, oftentimes it's the short, chubby, old guy who you're like, oh man, he's 5 for 6. He made all of our points. Okay, it's oftentimes not optics. Like you can't make an assessment of a company like you would picking people for a recess sports game. Okay? You can't do that. It doesn't work that way. And if you try to do that, you're wrong a lot. Okay, so we're going to go over the news for today. Some of these headlines, again, ridiculous. And overall, fine week, right? Fine week. It was very flat. I think we're down 1.5% roughly, which is pretty good considering the negative tariff talk we have again from the Tariffier, Mr. Trump. But guys, all of this stuff, when you're investing in good companies, almost none of it really matters. But there's a reason why 95% of retail investor means you guys, okay, there's a reason nobody makes money. And it's because they listen to the news and they pick companies based upon, are they strong? Are they fast? Are they tall? That's a very dangerous way to do it. Okay. And I understand when you're just starting out, that's kind of all you know how to do. And that's the only way you can do it. But as you get way more experienced, you start to really be able to pick up who's actually good at basketball. Okay. Which companies are actually good. Okay. Let me read the news and then I'm going to show you guys how to find the short interest on a company. It's very, very simple. And it's an extremely useful metric when people, okay, mainly people who are in the industry, are powerful people, couple of initials after their name. When they say negative things, you want to go see, oh, well, then what are the actual people doing? What is actually happening with the stock? So let me read the news and then we'll go over short interest. Okay. Stocks closed lower Friday as threats from President Donald Trump of new tariffs reignited concerns among investors about global trade tensions. The Dow Jones Industrial Average fell 0.6%, while the benchmark S&P 500 and tech-heavy NASDAQ Composite dropped 0.7% and 1% respectively. The major indexes had closed little changed on Thursday as the stock market stabilized after posting big losses the previous session amid rising concerns about the federal deficit as a budget bill moves through Congress. Volatility returned this morning after Trump said on Truth Social, I still can't believe that Truth Social is a thing. I think it's hilarious. Volatility returned this morning after Trump said on Truth Social that trade discussions with the EU aren't going well and that he recommended a 50% tariff on imports from the EU beginning on June 1st. In a separate post, the president said that any iPhone sold in the U.S. must be made in the U.S. and that Apple would have to pay a tariff of at least 25% if that doesn't happen. Okay, I got to pause real quick. That's crazy. I don't know what's going on there. I don't have an opinion yet. It's so much of this tariff environment is just bark and there's not a lot of bite. But that's a pretty crazy bark to say. I mean, that's the number one smartphone. Everybody's got an iPhone for the most part. That would be, I don't know what that's going to do to Apple. Hopefully this is all, again, bark and that they're able to make iPhones in India because that would be excellent for the company. Okay, coming into this week, stocks had rallied. Major indexes had posted gains in 3 of the previous 4 weeks. Yes! As Trump appeared to soften to his tone and trade as the U.S. paused massive tariffs with China. The comments this morning revived concern about the unpredictable nature of Trump's trade policy and the potential impact that it could have on economic growth and corporate profits. The Dow and the NASDAQ both declined 2.5% this week, while the S&P 500, which is now on a 4-day losing streak, shed 2.6%. Apple shares dropped 3% following the threat from Trump, losing ground for the 8th consecutive day and pacing Dow decliners. Other mega-cap technology stocks were down across the board. Microsoft, Nvidia, Amazon, Alphabet, Meta, Tesla, and Broadcom, they all fell slightly. A handful of stocks made big moves after the release of quarterly results. Shares of Deckers, DECK, the maker of UGG and Hoka and other shoe brands, plunged 20%. That's crazy, 20%. Ross Stores and Workday dropped 10% and 13% respectively. Intuit shares jumped 8%, pacing the S&P 500 advancers after the TurboTax maker posted strong earnings and a rosy outlook. Bitcoin was at 108,200 in afternoon trading after surging to a record high of nearly $112,000 yesterday. The digital currency this week hit an all-time high for the first time since just before Trump took office in January. The yield of the 10-year Treasury note, which directly affects borrowing costs on all sorts of consumer and business loans, fell to 4.51% from 4.55% at yesterday's close. Well, gold futures were up 1.9% at 3,360 an ounce. Okay. That was, well, first off, Bitcoin. Okay, I'm excited about that. Big believer in crypto. Don't understand it very well. So why do I believe in it? Everything is going digital. Eventually, so like XRP, the Ripple platform, they want to tokenize companies. I really like that. I really would love to have. I mean, the second that Palantir gets tokenized, SoundHound gets tokenized, NVIDIA gets tokenized, I'm buying it. Even if it's just one or two of them, I just think it's cool. So as Bitcoin rises, very excited for that. I am on the XRP hype train. Sorry if you guys think that's ridiculous. I do like it quite a bit, especially because they're trying to change the financial exchange. Well, I don't even really know what you would call it, but it's the wiring system. Okay, so when you wire money across the globe, very expensive, takes time. I have no idea why it takes time. I have no idea why it's expensive, but it is. So they're trying to work on that, which makes me enjoy it. As Bitcoin goes, so does the rest of these cryptos. I will say that the tariff talk is ruining all of the good things happening in the market. One of these countries is going to call Donald Trump's bluff. They are bluffs. Okay. Tariffs don't work for anybody if they're implemented. Okay. They work for everybody if they're threats and they're reciprocal. I don't know why the EU's taking its time. They need to just figure out how to make a deal, especially if things get manufactured here in the US. The economy here is going to boom. People are going to have more money to spend. It's going to be in circulation. The rest of the globe wants America's money. To get into our pockets means that they get wealthier. It's just how it is. Other than that, the news for me, I just want the tariff talk to stop. I would love for there to be zero tariffs with us in any country. If that happens, you pretty much, even if you had money in your mattress, okay, not exactly, but pretty much, you're going to make an immense amount of money. It affects every area of our economy. If our trade with other countries gets, it's kind of like if you have a river and every time you have a tariff, you put a big boulder in the middle of the river. Okay, well, eventually, right, it slows the river down. So once we remove all the tariffs, that bad boy is going to flow, okay, and it is going to overflow. And it'll be probably the best, what is Trump calling this? The golden era? It probably will be if those things happen. Okay, that's the news. Let's talk about short interest. Okay, I can't stand people who go on CNBC, and eventually that is definitely like a bucket list for me. You're considered an expert for CNBC. It's kind of like knocking it off the bucket list, like another step in the successful ladder. So it would be really cool to go on there one day. However, I can't stand 90% of people that go on that show who have these just certain attitude about companies, just like an immediate certainty, very confident, but the evidence says the exact opposite. And we can use Palantir as an example. The PE ratio, that's 99% of what these people talk about. And they're like, yeah, what do they say? I'm trying to think of the most recent one. This is a nightmare waiting to happen, or a ticking time bomb. And I'm thinking to myself, how? If you're going to say something's a ticking time bomb, you better bet against it. Right. And so when I hear, again, these news titles and these people talk negatively about any company, I immediately go to MarketBeat and I type in the company. So we'll just do this real quick. So MarketBeat, it's literally marketbeat.com. You type that in and then you will type in PLTR. It should come up. You'll click it. Okay. You should have like an overarching Palantir page. On the left side, you'll see a column, or they're essentially tabs. And the first one is stock analysis. You're going to go down to the bottom and you're going to click short interest. Okay, there's tons of ads on this. It is a pretty cool website, but you have to pay for it if you want to get the good stuff. But if you go on the left and you go down to short interest, there's a graph, but above the graph, so the very first thing you should see is Palantir Technology short interest data. And what you really want to go over to is the right column, and it says percentage of shares shorted. This says 3.57%. I don't really have a metric yet that I'm using in my head of like 50%. Is that, if 50% of the shares are being shorted, is that good? Is that bad? It sounds really bad, right? I would say probably anything over 15 to 20% I'm concerned about. In my head, I have no actual justification for that, but that would give me alarm when assessing a company. Okay, Palantir is at 3.5%. I mean, we'll round it up, 3.6. But all these people are hating on it. That's all we pretty much see is negative news cycles. What? How could that be? Okay, again, this is all fluff. And they just don't like it. They just don't like it, probably because they missed the boat. It's like talking about Caitlin Clark. 90% of people throw shade at, well, not 90%, sorry. A lot of the people in the WNBA throw shade at Caitlin Clark. A lot of people in the investment industry throw shade at Palantir. In fact, that's a great comparison. I'm going to say that. Palantir is Caitlin Clark. Okay? Cocky, but they mind their business and they show up and they put people to work. Okay? Dropping fools, logo three-pointers, 10 plus assist games. I mean, that's what Palantir is. But even though she's the best player probably in the history, women's basketball player, the best women's player ever, the WNBA dislike her. Just like people at Wall Street dislike Palantir. It makes no sense. Anyways, okay, this is a very good metric, and I like using it to compare the truth, where the money is, versus what people are saying. Okay, you could pick any one metric, and this is actually good, and we'll close with this here. Valuation metrics, right? PE, earnings per share, PEG ratio, sales, equity, short interest, dividends, all these different fundamental analysis, even some technical analysis information. They're all just pieces that help you draft a team in the playground, okay, at recess. That's all that these are. Any one of them that's really bad doesn't mean the company's bad. And we have evidence of that all over the place. And what's the other short end of the stick, this is why picking stocks is so hard or investing is so difficult. Any one of these great things, great measures, doesn't mean the company's doing great. Okay, it's an accumulation of everything. And then even after that, you have to be able to make a decision. Okay, you have to be able to make a decision. And one of the most, again, I've mentioned this before, when you're buying and selling things in your portfolio, whether it be ETFs, mutual funds, individual stocks, bonds, gold, crypto, any of these things in your portfolio, it's like a parlay. And that's what's so crazy about it. If you're trading, which so many people trade, and I don't know why they do this. Actually, I do know why. Because they don't spend the time to learn about the companies. They like chasing trends, and they like chasing momentum. Very, very dangerous. It's very easy for me to hold Palantir even though it drops, or Tesla even though it dropped 50, 60%. Very easy for me because I know about the company. I spent time. Okay, it's just like picking the kids in the playground. Okay, maybe, or we'll just use pickup basketball. The old guy that we talked about earlier, the old chubby guy, old short chubby guy who's actually the best player who went 5 for 6. You learn to pick that guy soon first because you've played with him. You've spent time with him. That's what you need to do with these companies, guys. When you're investing, you can't just put money in stuff because it's up 10% or because it's down 10%. You need to spend time intimately understanding the ins and outs of these companies. You need to see if the chubby guy can play. And once you get an idea of everybody at the court, you're able to pick your team way better, right? And oftentimes you want to keep running with the same guys or gals. Okay, if Caitlin Clark was out there, I'm picking Caitlin Clark first. But that is what's so difficult about this is the parlay. You have to be able to pick something that's a great company. Then you have to decide when to sell it. And that's the parlay of it all. And what we really do well here is not the selling part. I'll admit that. We don't do a lot of selling. Now, we do some selling, but that's for tax purposes, or it's to reposition to what am I thinking of? Rebalance. Jeez Louise, that left my brain pretty quick. To rebalance a portfolio. It's very important to rebalance, okay? But did I know Tesla was going to drop 60% because of the Doge and Elon joining Trump's team? I had no idea. Okay? And I had people wanting to sell that. They wanted to sell in the middle of it. And I'm like, look, if you guys sell right now you have to decide when to get back in, because this is a great company and this is a part of our growth portfolio, which is what you want to be in. And they're like, yeah, that's true. If they would have sold, who knows when we would have got back in. And now I have to make an assessment on getting back in when I would have just held the company the whole time in the first place, because it's a great company. That's what this is all about, is picking great companies and holding them. Individual stock picking is extremely difficult, and I do not recommend you do it yourself. Almost no financial advisors do them for the clients. We are very unique in that. Okay, and I'll admit that out of the thousands of advisors I've met, their actual hesitation is, I don't pick stocks. No. We leave that to the fund managers. But then they're taking 1.5% off the client's account, and I'm wondering, what did you do for them? What are you doing? You know, a lot of these people, it's like, oh, well, we rolled over their 401k into an IRA. That's it. That is 5 minutes of paperwork. And now you're going to get 1% on their account portfolio forever? Perpetually? What? That's why it's so criminal, and why you need people in your life. Okay, you either got to spend the time to do it yourself, or you got to hire somebody who's actually trying to understand the investment world. Okay, a lot of these people in my profession are paper pushers, and I hate to say it. They're salesmen and paper pushers. They don't want to read 10Qs and look at the short interest on companies. It's too difficult for them. And that's fine. Okay? But if you want to be the master of your own finances, you got to do that. You got to do this stuff. And then if you don't want to, pay us. Okay? Hire us to do it. We'll do it for you. We're not allowed to guarantee any kind of returns, and I would never want to do that anyways, but we like doing this job. And when you like doing something, you tend to be better at it. Okay, that's it. I've been ranting. Guys, that's what we're here for, though. You guys are here to listen to the rant. Every now and then, maybe 1 out of every 10 rants, it's really, really good. Today's was good. I hope you guys learn about the short interest and you take advantage of it. Again, anything I would say above 15%, I definitely would put that in the category of hesitation. Maybe I don't, or in the, like if you were putting a good and a bad quality on a company, I definitely would put that in the bad quality or bad column. All right, guys. Anyways, next week we have ideally some tariff talk that gets closed. We get some deals done. I would love before Q2, so July 1st, or that's Q3, right? Yeah, that's Q3. I would love for the tariffs to be, or a couple of deals to be done. I would love for us to be at 30 or at 6,200 in the stock market and to have just a better outlook with these deals, especially with China. That's my hope for everything going on. Okay, guys, as always, invest early, invest often. We'll see you next week.